Thank you for tuning in to Grow by Joe. Thanks for watching this video. If you don't know me, my name's Joe Camberato. I'm the CEO and founder of National Business Capital. Me and my team have helped finance over $2.5 billion in funding for small businesses. We've done over 25,000 transactions, and some of those transactions have been revenue-based products. Revenue-based financing has really exploded over the last few years. It's been around for a very long time, but it's become more mainstream in the most recent years. And non-bank lending has actually passed bank lending for the first time, going back to 2019, 2020, which is really, really interesting. And there's a lot of non-bank lenders out there that offer all different type of lending products. Some of the revenue-based products are term loan products. There are revenue-based products that are lines of credit and revolving. And then there are revenue-based products that are fully unsecured, that don't have personal guarantees. And if you were to go out of business, you wouldn't be on the hook for borrowing that money. But the problem is when you get turned down from a bank, or a business owner gets turned down from a bank, it's really frustrating and challenging to know where to go, and there's not a lot of information out there. So why would revenue-based financing be right for you? Well, if you're a business that's selling direct to consumer, and you don't have the core things that a bank is going to look at. So banks are going to look at like 3 or 4 pieces of collateral. Real estate, which is the obvious, heavy machinery, B2B receivables, and inventory. Now, if you don't have those 4 core things, in order for a bank to lend to you, you need to have a lot of profit and a lot of cash on the balance sheet. Even if you have that stuff, it may be a challenge for a bank to lend to you. Now, banks want to do deals today that are $10, $25, $50 million and higher. A lot of banks don't want to do deals under 10 and 5 million, and that's creating a big gap for businesses like you out there in the market today. So if you're a business that doesn't have B2B receivables, the inventory, the equipment, and the collateral, the reality is revenue-based is probably going to be one of the most realistic options for you. Now, what's really important is working with the right revenue-based lender. Any lender that you're going to work with, you want to do a simple Google search and look at their reviews and get some online research. If you cannot find anything online about the lender that you're working with, or the broker that you're working with, or there's bad reviews, you want to move on right away. It's super important as you grow and scale your business that you work with the right lending partner. The challenge is there's many options out there today. It's good that there's options for business owners and that you can access capital, but the challenge is that every lender has specific requirements. So some lenders work with only certain industries. Some lenders work in certain states. Some lenders do deals only up to $150,000. Some lenders have a minimum of $100,000 and go up to $5 million. Some cap at $250,000, some $500,000. Some will go down to a 580 credit score. Some have a 620 minimum, some 650, some 680, some 700. Some need you to be in business for 3 years, 2 years, 5 years, 10 years. Some need you to be profitable, some don't need you to be profitable. Working with the right lender is really important. Now, you're probably watching this saying, yeah, I get that. That's why I'm here. That's why I'm watching the video. Don't worry. My team can help you with this, so if you have questions and you want to explore further, just check out the link below. You can speak with my team and we'll help. Either we might be able to lend to you, or if not, we can pull the right lender in, and that's really important. Separately, if you're going to do a revenue-based product, the reality is most lenders do deals that are 12, 18, and 24 months. As I make this video, prime rate is still at 8.5%, so even if you had a bank deal today, most bank deals typically are prime plus 2 to 3%. In the ABL world, it could be prime plus 4 to 6%, which would put you at an interest rate through a bank or an asset-based lender of anywhere from 10 to 14%. So yes, it is high. We are in a high interest rate environment. It's probably still cheaper than giving up equity. So it's really important today, if you're going to search for a revenue-based financing product, is that you know your ROI, you're doing the math on the opportunity, you're comparing it to the cost of capital. If the ROI outbeats the cost of capital, usually it'll make sense to still do the deal. And you also have to remember that you're retaining equity, and if you're growing revenue and profit, you're also building market value in your business. These are all things that you want to take into account when you're looking to borrow money and grow and scale. Okay, so a few things that I just want to recap and really important and remind you of. One, make sure you research the lender that you're working with or broker. You want to make sure that you're with a reputable lender or broker that's doing the right thing, that can give you a best deal. Super important. Two, sometimes on revenue-based financing products, lenders will offer prepayment discounts, meaning if you want to pay off early, you can actually get a discount, not have to pay back the full amount. Really important, you want to make sure that you ask that. Three, any revenue-based product typically should be have no personal guarantee, so you want to make sure that you ask that question as well too. Four, make sure that you're borrowing enough money. I can't tell you how many times I see customers and business owners underborrow. Understand your opportunity, leave some buffer in there for error, leave yourself a cushion. There's nothing worse than borrowing not enough and then something changes in the business and it's harder to access capital. You don't want to overborrow at the same time, so you only want to borrow what you need with a little bit of a cushion in there. You don't want to overextend yourself, but you don't want to underborrow. And the worst case, if you crush it, if you borrow money, if you grow, if you scale, you can always pay off the revenue-based financing early. And as I mentioned, if you have prepayment discounts in there, you can get a discount and not have to pay back the full amount. I hope you found this video helpful. You probably have further questions. If you do, that's okay. Check out that link below. Get connected with my team. They can walk through what you're looking to get accomplished in your business and share. Maybe it is revenue-based, or maybe it's one of the other lending products that we offer. So we're happy to talk those through because we want to make sure that you're choosing the right lending product to grow and scale your business in the most effective way.